Hi, I'm Patu from FreeFinCal, and today let's talk about how you can quickly spot value stocks or undervalued stocks. A couple of days ago, we had talked about the pros and cons of value investing and how you need to go just beyond simple parameters like low PE, low PB, high dividend yield, and so on. Morningstar has a page which allows you to quickly screen for these stocks. This page is actually not found in the main menu. It's actually part of the tool set. If you go to tools, you should be able to see this page. But it was earlier prominently visible, and I had written a post on that. But since then, for some reason, they had removed it from view. I actually thought for a long time that this feature is no longer available. But then via some random Google search, I found out this page, and I found out it's actually available and actually updated. So if you go here, you will see you can choose between NSE and BSE. You can choose the sectors, and there are four handles or four filters for you to select. So now the first one is called moat. That's basically a measure of sustainable competitive advantage. That is, how quickly can a competitor overtake a particular stock in terms of profits, in terms of production, etc., popularity, brand value, whatever it is. So a moat is basically, as many of you know, it's basically a trench around a castle where to protect invasion. The trench will be filled with water. It's a term popularized by Warren Buffett. And a company with a wide moat means that the competitive advantage is very high. It's very difficult for companies to overtake, for competitors to overtake that particular company. So ideally, you're looking for companies with a wide moat. Narrow moat means it's very easy. The competition can easily overtake it. So the moat ratings are no moat, narrow, and wide. Valuation essentially tells you how what is the intrinsic value of the company and the current price. If the current price is lower than the intrinsic value, it's undervalued. If it is over, then it's overvalued. If it is close, it's fairly valued, and so on. So you have fairly valued, undervalued, and overvalued. For example, if you go to the HDFC page of Morningstar, there is a price versus fair value tab. If you look at that, this was the fair value of HDFC, and the black line is the price, and I have to find out. Recently, it has dropped down to fair value. So according to Morningstar, and that's an estimate, HDFC is actually a fairly valued stock. That sounds curious at the very least. So then there is an uncertainty rating. That is, how certain is Morningstar in ascribing something as overvalued, undervalued, or anything else. So something with low uncertainty means that the stock itself is low risk and the Morningstar is confident about the rating. High uncertainty means the stock could be very risky, high risk, high reward potentially, and also Morningstar is not very certain about its rating. So ideally, you would like to have wide moat, undervalued or fairly valued at best, low or medium uncertainty, and then finally financial health, which is rated as weak, moderate, or strong. Financial health tells you how what is the probability of the company getting into financial trouble, financial distress, inability to repay debts, and so on, or inability to sustain profits, and so on. So ideally, again, financial health should be sound. So let's give this a spin. Now, if you notice here, there are 2,781 stocks currently listed with none of the filters. If I just set the filter to undervalued, notice that as many as 2,469 stocks are undervalued. That clearly tells you undervalue alone should not be the filter. There should be other filters to narrow this. And it depends on the market, current market situation. You will see the mid cap, and at least for the mid caps, Nifty Next 50 and small cap, the prices will be low. Therefore, it's not. It should not be surprising that you would get that undervalued rating, but that's not enough. Now you want sound and financially healthy companies. So if I set this as strong, then you will get 497 companies with undervalued with financially strong financial health. And the rating, I should have a wide moat, ideally, in the competitive advantage, and only ITC fits this bill. Only ITC has that wide moat. That's a pity. If I go for narrow moat, I think there are like 255 companies, not so bad, and the uncertainty should be low. Ideally, we can set the uncertainty as low. There's nobody. There's no one. Medium uncertainty, you'll get Wipro. Wipro is the only stock which is currently undervalued, strong financial health, medium uncertainty in the valuation estimate, and narrow moat. So you can play around with this and get different stocks. Do this once you create a short list based on the sector, whatever you want to do. Then study the stock carefully. I had watched my other video on valuation. I had talked about a Wikipedia page on undervalued stocks that gives you a list of parameters that an undervalued stock has to satisfy in order to actually call it undervalued. And we had talked about discounted cash flow method in that video as a method Warren Buffett actually says in his writings. He advocates looking at the future cash flow. He doesn't actually say use discounted cash flow, but that's what he advocates. In general, or that's our interpretation. Morningstar uses the discounted cash flow. I also have an Excel sheet where which you can play around with it and learn about the method, but it has got several estimates. That is why they have a uncertainty rating associated with it. So after you create a short list, go to the Wikipedia page, look at the undervalued stock Wikipedia page, look at those listings. The stock should not be in any kind of financial trouble, should not have too much debt. If it was around during the last recession, you should have made a profit, or at least you should have managed healthily in the last recession, and so on. There's a big list. Go through that, and then that will give you a very nice, tiny, short list to invest. So that's a quick way to shortlist value stocks. Thank you for watching. I'll catch you again later.